Welcome back, traders. It's a new week and another chance for fresh trading setups. This video I'm going to analyze euro dollar, dollar yen and Bitcoin. While the US calendar will be relatively light and Fed officials will be in blackout mode, besides Jay Powell, who will be attending a virtual conference on banking capital requirements. Of course, he may not say anything important related to monetary policy ahead of the FOMC policy meeting next week, but any comments about his position and Fed's independence may attract attention. But the real spotlight will be on the ECB rate decision and Eurozone's flash business PMI figures. Of course, any headlines on the trade front could be also quite crucial, as the EU is preparing to meet to discuss potential countermeasures against the US trade policy. And the tech earnings season continues this week with Tesla and Alphabet reporting their earnings. Those may affect stock markets, but also crypto such as Bitcoin. So let's dive in and let's have first a look at euro dollar and the ECB rate decision. Well, the central bank is not expected to cut interest rates. It seems that inflation is heating up again, and trade risks remain large, so the central bank may pause its rate cut cycle following 25 basis points reductions to 2%. So, but perhaps its guidance might cause some volatility. It will be interesting to see about when policymakers are thinking to cut interest rates next. According to futures markets, there is another rate cut priced in by December. So the timing of this rate cut could make the euro to move. So looking at the technical picture now, while euro dollar has closed below its 20-day moving average last week, it has been steady since then. But overall, it keeps trading above its previous high, above April's high, around 1.1570. So that keeps this upward trajectory well intact. Therefore, although the drop below the 20-day moving average is discouraging, we still have a chance to rebound. And looking at the technical indicators, well, we can say that the double bottom pattern in the RSI and the fact that the stochastic oscillator is trending up, that provides some optimism for a bullish breakout above this resistance line and above this constraining line that connects the previous highs near 1.1650 and 1.1670. If we surpass these, then the next resistance could come near this support line over here at 1.1720, while higher than that the pair will try to mark new higher highs once it successfully closes above the 1.1850 and 1.19 region. This includes the 161.8% Fibonacci extension of this previous downfall. So any successful penetration higher could drive us towards the 1.20 mark, and then probably this longer term constraining line at 1.21 could be the next target. Now, if downside pressures return and the price fails to hold above 1.15 and above the 50-day moving average, then the 23.6% Fibonacci retracement level of this up leg at 1.1435 could come next into view. Failure to hold here could send stronger bearish signals, likely pressing the price towards 1.12 and 1.1270 and closer to the 38.2% Fibonacci mark. Now looking at dollar yen, well, unlike euro dollar, this managed to stage a bullish breakout above its 200-day exponential moving average for the first time since February. But now we can see that the price is stabilizing, and Sunday's defeat in Japan's election, Prime Minister faced another setback in the upper house that strengthened the yen and pressed the dollar yen back towards its 200-day EMA at 147.80. Now the next question is there more bullish fuel in the tank for the pair to resume its upward trajectory? While looking at the RSI, the stochastic oscillators down here, it seems that upside pressures are fading. Both indicators are pointing to the downside after peaking near overbought levels. So the pair might be sensitive to downside movements, particularly if it fails to hold above the 200-day EMA, and more importantly, if it closes below the 38.2% Fibonacci retracement level of this downfall at 147.13, that could drive the price towards the 146.10 region where the 50-day EMA is placed. A deeper decline could then test the 23.6% Fibonacci of 144.35 and even reach this tentative support line near 143.60. Now, if upside pressures return, then I would like to see a clear close above 148.80, 149.40. That's just around the 50% Fibonacci mark. So a penetration higher could probably boost market sentiment, lifting the price towards the next barrier seen between 151 and 151.60. And finally, looking at Bitcoin in the 4-hour chart, while the king of cryptos gained significantly, rising to a new all-time high of 123,153 last week after President Trump signed his Genius Act into law and promised more investments in crypto markets. However, since then, the price has been in consolidation mode, forming this symmetrical triangle over here. However, this seems to be a bullish pennant formation following this steep rally, so that suggests a bullish breakout, and the technical signals down here cannot rule out another upside move. Both the RSI and the stochastic oscillator are pointing upwards. Basically, the RSI is still above its 50 neutral mark, so that suggests a potential upside move. However, for that to happen, probably the price will have to close significantly, or let's say sustainably, above the 180,000, 200 and 120,500 territory, and out of this triangle. A sustainable move above this region could drive us towards the previous all-time high of 123,153, or even try to reach the 125,000 psychological mark. This coincides with the 161.8% Fibonacci extension of this downfall over here, and includes the 2025 resistance line, so that may attract special attention before the price heads towards the 126,760 and 128,100 territory. Now, in the event of a pullback, we can see that the price is currently weakening. So if that weakness continues, so the price may initially retest the 160,700, 170,250 region. That's where the 23.6% Fibonacci retracement of this uplift is placed. While not far below, the support trend line from June could also protect the market around 115,600. If not, then the price could reach the 38.2% Fibonacci mark of 113,670, a break of which could cause a steeper decline towards the 200-day SMA at 110,600 at the moment. So that's everything I wanted to share with you guys. Hope you have a great trading session ahead. Keep a close eye on the ECB rate decision and Eurozone's flash PMI figures, as well as any trade developments. So thank you for watching, and see you next time. Bye bye for now.